Hi, I'm Hafeez again, and I'm going to take you through to another important area of the ACCA F5 syllabus in this session. Okay, and this is budgeting. So let's get started. Before actually I start talking about different things, this session which we are going to do now, it's all discussions. It's purely narrative and it's purely talk or chat. There's a huge chunk of theory about budgeting in the syllabus, okay? So the best way to prepare is please read a relevant chapter of the budgeting from your textbook, from your notes, which you can see on the screen and you can download from the platform as well. So read the study material about the budgeting, and then you, of course, now you are having my session with me as well, okay? So I will keep on giving you the guidelines about different ideas in budgeting, okay? And then hopefully the knowledge can be improved to answer the questions in real exams. There are two types of questions which examiners can set from this theory. One is purely knowledge type questions. Many times examiners only relies upon knowledge type questions, meaning what a budget is, what are different objectives or functions of any budget, what's the procedure to, or what are the steps involved in producing the budgets, what is the system of budgetary control, etc. What are different budgeting types, okay, which is all theoretical knowledge, no applications. But sometimes 1 out of 7 questions, 2 out of 10 questions, sometimes like this, as one requirement or one part of the question can be specific to organization as well, okay? That general theory can be mixed with some applications. For example, examiner can pick up a number of functions or aims, that how these functions, aims or ideas of budgets may help this organization in question. Or the company is using one type of budgeting system at the moment and the management or top management likes to change it to a better one. So which budgeting type is more suitable to this organization? Or company is having problems with the current budgeting systems. What can you suggest to remove or eliminate those problems, etc. That's kind of applicative side of the budgeting, okay? And later on it can be linked to more applications to develop flexed budgets, which we will see in different session. And then later on the final idea when the budgets will be used for the standard costing and variance analysis purposes when we calculate and apply the variances, okay? So purely knowledge and then applications as well. So here is our session, what a budget is. I suppose everybody knows about the budgets because most of us, we do plan in our life. Whether we are planning for the holidays or we are planning to start ACCA or any other qualifications, any other education, we do plan things, okay? Why do we plan things? Because we don't want to jump into the future without a plan. So we want to do our homework and then we want to go into the future. And that's the simplest meaning of a budget. Likewise, in management accounting, it is a quantitative plan. Budget is a quantitative plan which is generally prepared for a specific period of time, generally expressed in monetary, financial or quantitative terms. In most of the organizations, budget period is 1 year because financial statements or financial reports are covering 1 year. But in some organizations where the product life cycle is short, budgeting can be done for a shorter period of time as well. That if a model of the product remains in the market for 6 months, there is no need for budgeting for 1 year. We can do the budgets only for 6 months. And if in other projects, other companies or industries, if the product remains in the market for 3 years or 4 or 5 years, like car industry, one model of the car remains there for 4, 5, 6 years. So budgeting for maybe 4 years, 5 years, okay? Or construction industry where some of the large construction projects may take 3 years or 4 years of time, then the budget span should be expanded to 3 or 4 years time as well. So it's not a hard and fast rule whether the budget should be for 6 months or 1 year, 1.5 year, 2 years. Whatever is suitable to the organization is perfectly acceptable. Now here are some of the functions, or sometimes called as objectives or aims of the budgets. Okay, you can see the mnemonic. It's not very suitable or ideal one in the world. PCCEMA. Okay, I don't know how would you pronounce it, but just remember PCCEMA. Planning, control, communication, coordination, evaluation, motivation, and authorization. I know I sound like a sad loser remembering all of them, but you need to remember some of them. When the knowledge is required in the exams, they ask you to have some ideas in your mind. First of all, planning. Planning. Budget, as the definition, budget is a quantitative plan. So idea is, why do we plan? Simply because budgets or plans set specific directions for the managers. These directions can be called as standards or targets or benchmarks, which define specific instructions or responsibilities to various managers, so that managers know what they will be achieving or trying to achieve over the next period of time. Okay, with the help of these targets or benchmarks, implementation or further tasks can carry on. Okay, control, because these will be revised again and again, so I will be very brief in here. Control simply represents monitoring, supervision or implementation. Once we develop the budgets, then the next stage comes, we are going to supervise or monitor or implement the budgets. So in the implementation, when we are looking at the results, okay, on a regular basis, continuous basis, then we see how much of the budget has been achieved and whether the achievement is as per budget or better than budget or worse than budget, so that if we need to change our plans, we can change in time, or if we need to change the staff performance, we can change as well. If somebody needs more training, we can provide training in time. If somebody needs more support, we can provide more support so that the budgets can be achieved. Okay, communication. A number of people believe that budgets provide a very useful mechanism of communication within the organization. In a number of organizations, it is very hard to get information from other departments. But when the budgets are set within the organization, they become like a formal system of management information. Okay, when the information flows from one side to the other side of the organization without any problems. We don't need to beg for the information. Information flows from one side to the other naturally. For example, the production manager cannot produce production budget without the knowledge of sales budget. So sales department has to provide input to the production department that, look, I am planning to sell this volume of units in this period and you need to produce that volume. Okay, so production department will get the information from sales department in time. Then, and one more example and we'll move on. Purchasing department cannot purchase raw materials without the knowledge of production quantity. They need to know how many units will be produced so that they should be buying raw material and components for those units, etc. Coordination. Coordination simply represents a teamwork within the organization. Okay, we like to build a culture within the organization through the budgeting process that no activities should be done solely. Okay, activities should be interwoven and they should be done with the teamwork. Okay, here is an example. When budgets are produced, managers are clearly given the instructions to sit down together and then after discussions develop the budgets. Not like, I'm working in the sales department, I'm forbidden to go into the production department. We can't discuss things with each other. No, that's not the case. Teamwork is this, that sales department wants to sell 1000 units. For example, in a budget meeting, sales manager says, I'm planning to sell 1000 units for this month. And production manager says, hang on a second, how can you sell 1000 units? Simply because I can sell 1000 units. Well, you can only sell 1000 units, response from production department, if I can provide you 1000 units. But my production capacities of the plant and machinery are maximum limited to 800 units. I cannot produce more than 800 units from the current or existing plant and machinery. So you need to downgrade your plans, hold on your emotions, okay? While production department was saying to produce 800 units, another shout comes from the purchasing manager. How can you produce 800 units in this period? 800 units will need 800 components, and there is a shortage of supply of these components these days. So for the next 2-3 months, the shortage will be there, and we can only supply you maximum of 600 units because we have signed an agreement with the supplier. So there we go. Budgets cannot be produced blindly and sitting down with your own departments. Most realistic budgets should be that all departments should give inputs to each other, and with the help of a teamwork, we should develop a plan, a common plan, which can be achieved by the whole team, by the whole organization. Okay? Evaluation. Evaluation is budgetary review, that once the budget is produced, budget is implemented, we want to see whether the budgets have worked or budgets have not worked. So, at the end of the period, when we get the actual results, we compare the actual results with the budgeted results, and we see the performance, whether the actual performance was better than the budgets or actual performance was less than the or worse than the budgets. And with the help of this, later on we will see a system of variance analysis. We will be calculating favorable variances and adverse variances, which will become sort of a feedback for the management, that should they need to improve the budgets to make it more tough, or should they need to improve the performance of the workforce somehow, motivation and so. The next advantage, function, objective or aim of budget is motivation. A number of management experts believe that budgets provide a very useful medicine or drug for motivation. That it is hard to motivate workforce or employees or staff without the budgets. Why is that? Well, it's very simple. We all like challenges. If there is no system of reward and punishment, nobody will be excited to do anything. Okay? We feel, I mean, this is built in somehow, not necessarily relating to accounting or organization or anything. It's part of the life. Okay? Relating to your life, like ACCA studies. When you started ACCA, you were clearly given the target of 50 marks, that if you would achieve 50 marks, you will be passing candidates. And if you would not achieve 50 marks, you will be on the other side of the situation. So that motivates me and you to do as much work as possible to achieve at least minimum 50 marks. Secondly, when we compare the results, oh, so many people passed, 40%, 50%, 60% people passed, then that motivates me as well. That if 40, 50, 60% people have achieved the target, I can also achieve the target. I just have to do a little more work, a little more practice, a little bit more revision and readings, and that may help me to. So the targets or budgets or plans motivate things. Okay. For example, we plan for the holidays and then we get excited to do things for the holidays, that what specific shopping we need to do for the holidays and what other things, buying the airline ticket or booking the hotel or something. But before we book the hotel or buy the tickets, we need to have a plan holidays. Okay. So with the help of plans, we get excited and we drive ourselves in the future. Authorization and delegation. So what we believe is budgets provide formal authority to spend the money. That managers are given, this is the budget for this period, you are not supposed to spend more than that. Because if you would spend more than that, we will ask you, why did you spend? and if you will not justify, you will be in trouble. Delegation is simply a formal authorized as a formal delegation of responsibilities, that we delegate specific tasks, responsibilities and jobs to different managers so that they know what exactly they need to achieve over the next period. And if they will achieve, well done. If they will not achieve, then we need to do things, okay, which may improve the performance. Now here is the next one. So it's all reading. Best is when you will read, okay, it will be self-explanatory. Budget preparation, steps in budgeting. The very first step is budget aims. Why are we sitting down to plan? What kind of plan are we producing? Okay, is it a strategic aim, like are we sitting here to discuss how to expand our company in the next 5 years, how to change the plant and machinery in 4 years time, or is it a technical aim like improving the profits by 10%? Once we decide for what purpose we are sitting down in here, okay, then we look into some key assumptions which are adopted at the beginning of the budget process, which may include estimating the inflation rate, foreign currency exchange rates, or any petroleum prices, etc., depending upon if it's relating to the industry, okay, or any demand or supply forces, okay, or you can think of something like what currency are we going to use for the budgets. Mostly it's the head office currency being used, even though some other branches may be elsewhere as well. So once we have, or maybe efficiency levels, what efficiency level are we going to use for the next period, what learning curve are we going to apply for the next period, etc. A number of assumptions are adopted at the beginning of the year. Secondly, identify principal budget factor. Okay, well, there are one of the two principal budget factors depending upon the nature of the organization. For a profit-making organization, sales or revenue becomes the principal budget factor, simply because sales drive everything else. Whereas in non-profit organization, funding, cash or donations, okay, from different sponsors or different donors, that becomes the principal or key budget factor, because with the help of money coming from sales or coming from donations, that will drive any other activity of the organization. So if there are more sales, we can do more things next year. If there are less sales, we may buy less purchases as well. Okay, so all activities are driven by sales or the funds in non-profit organization. Next one is, once we identify the sales, okay, next we are looking at preparing the sales budget. The very first budget we produce is production of the sales budget. Sales budget is very simple. All we need to do is two things, knowledge of two things. One is the sales volume and second is the selling price. So for each product we need to know what sales volume and what selling price. Selling price multiplied by the sales volume is the sales budget. We will not be asked to produce sales budget or any other budgets, but we will be asked to understand them. Okay. Now, when we produce the sales budget, a number of host of factors are considered. Okay, that what would be impact of likely changes on the sales budget. For example, if the marketing budget is cut down or marketing budget is increased over the next year, okay, what will be the likely impact on the sales? Or for example, if we are looking at the supply and demand forces in the market, we are looking at scarcities in the market, we are looking at the competition level in the market, how these will affect or price decisions on the selling price, on the sales budget, how these factors may impact sales plans. Okay, these factors are promising and helping to increase sales, or these factors are not promising and they are bringing the sales down. Okay, so we will look at some related aspects and then we check whether sales budget is realistic or sales budget is not realistic. Once sales budget has been developed, then we look into preparing all other functional budgets, meaning we produce the production budget, we prepare the purchasing budget, we prepare the raw material purchasing budget, we produce the direct labor budget, we produce variable overheads budget, fixed overheads budget, we produce the cash budget, administration department, selling department, distribution department. We produce budgets for all individual departments or functions of the organization. The budgets can be produced by using participatory approach or non-participatory approach. We will see to it slightly later on. In some areas participation helps, and in some areas non-participation is more suitable. So we will see which approach will be applied. Negotiation. Negotiation is sort of trade-off between senior managers and junior managers. So it's like a give or take sort of things. Idea is, a number of times senior management, I mean, don't get me wrong, in a number of organizations, senior managers are like this. Senior managers don't trust the junior managers to some extent. They feel that junior managers may create the budgets, may set the budgets which are so easy to achieve, which are so soft targets to be achieved. And in management accounting terminology, these soft targets are called as budgetary slack. Budgetary slack is like this, that junior managers, in order to save their own skin, they will manipulate the budgeted results, meaning sales people are generally criticized to understate the sales results, and other departments are generally criticized to overstate the expenditure budgets, so that even the less sales are achieved, at least we know we have performed as per budget, or luckily if we achieved better than the budget, then well done. So the idea is, whether it's good results or bad results, aim should be to produce realistic budgets and to eliminate any budgetary slack. Okay, so budget should be set to the best of their knowledge and their skills and intentions. Okay, a number of people think people with bad intentions introduce the budgetary slack. Okay, but the professional and people with integrity, honesty, they create realistic budgets, even difficult to achieve, even may not be very may not be very promising. Okay, they may get criticized, but at least they were honest about things. Okay, review is a very long process, and review is a process which is used to test whether our budgets are working to achieve our original aim. So for example, our original aim was to increase profits by 10%. If our original aim or budget was to increase the profits by 10%, let's have a look at if all budgets are helping to increase the profits by 10%. But if we looked at all budgets and we seen profits are only being increased by 1% or 2%, it simply means all this exercise is very unhelpful, wasteful. Okay, what should we do to get our original aim of increasing the profits by 10%? So review process starts with producing a master budget. Master budget is a summary of all budgets together. All budgets are grouped, merged or linked together, and this grouping or merging is called as master budget. Usually we produce three main summary reports from the master budget. One is the budgeted income statement, second is the budgeted balance sheet or financial position, and third is budgeted cash flow statement. One example, if for example we had a review and we seen from the budgeted income statement that profit is not increasing by 10%, let's have a look at how can we achieve this target. So first thing is financial feasibility. Okay, financial feasibility is, let's look at every line of the budget: sales line, cost of sales line, raw materials, direct labor, overheads, production cost, inventories, administration expenses, selling and distribution expenses, all other expenses. Okay, we look at every line of the income statement and see how any improvement can be made in those lines, in those factors, so that this target of 10% can be achieved. Okay, so number one, in the review process, we want to test, we want to check if the budgets are reaching to the aims, so they are financially feasible. Secondly, not only feasible, budgets are acceptable to all managers as well, because end of the day, who will achieve the budgets? Well, the managers of each department. And if the managements wholeheartedly accept the budgets, then only we can consider budgets are acceptable, budgets will work. But if the managers are not happy about the budgets, then they will not try that hard to achieve the budgets, and that would give rise to conflict, that we are telling them to achieve and they are not achieving. Okay, and that would give rise to dysfunctional behavior, or in other words, I mentioned conflicts. Okay, that they don't want to achieve. A number of times it happens. So in both ways, budgets must be financially feasible to achieve the aim, and managers should happily accept those targets, that not to worry, we will try all our best to do things, all our best, hard work. Okay. Once the review process has been made and budgets are functional, then we give formal authorization or acceptance of the budgets. We delegate and pass on all individual budgets to different departments after the review process, and then we hope these tasks will be achieved by individual departments. Okay, so once we issue the budgets, then the next area is budgetary control. Okay, so first job is done, that we have developed the budgets, we have reviewed the budgets, we have authorized the budgets. Now comes the budgetary control. Budgetary control involves start of the budgets, budget setting process, okay, developing the budget, and then right at the end of the period, actual results, achieving the actual results. We compare the actual results with the budgeted results to see whether the actual results are better than the budgets or actual results are worse than the budgets. Okay, just to see whether our performance was favorable or our performance was adverse. And in a later chapter we will discuss variances, because the difference between actual results and budgeted or expected results is called as variances, so that management can take necessary control action by looking at these differences or variances. For example, in a number of cases, the relevant control action can be that managers could not perform, so let's do something about it. Let's put them on some trainings if they are not familiar with something, improve their qualification, okay, put them on different study programs so that they can learn better knowledge to improve their output. Okay, or motivate them, change the work environment, change the machines or equipment or something, so that they can be better utilizing their potential. Or sometimes managers might have tried all their best, staff was not to blame, but probably original budgets were to blame, that original budgets were not realistic. We have set so hard targets which were near to impossible, okay, close to impossible. So in a number of cases, we don't want to demotivate the workforce or employees. So what we do is that we can even downgrade our budgets as well if they are not realistic. Idea is the budgets must be attainable, achievable and realistic. Excuse me. Now it involves us with couple of budgetary control systems. You know, the comparison, we compare the budgeted results with something, okay. There are two types of control systems. One is part of the syllabus and one is just little idea you need to remember. Feedback control system. Feedback control system is simply comparing, I mean, I'm talking about the summary of these paragraphs. Feedback is comparing actual results with budgets. And the difference is called as the variance. A number of people believe budgets are produced at the beginning of the year, actual results are achieved at the end of the period, and at the end of the period, this variance calculation exercise is nothing but a blame game. With the help of variances, we just want to criticize and shout at the managers. Why did you overspend this money? Why did you sell less? Why did you do this wrong and that wrong? Because we want to blame the people, that's why we calculate variances. Okay? A number of people think in that way. Why do they think in that way? They simply think with the help of variances, we can't go back in the past and change the results. So now there is nothing else but a blame game. Okay? Can we go back into the past and change the results? And you probably will be saying, no, there is no way. Okay? So what is this whole idea about? Idea is a number of people believe this is nothing but a sunk exercise. Why sunk? Remember sunk in relevant costing. The basic meaning of sunk is something which has happened in the past or something which has been incurred in the past. And question arises, both actual results and budgeted results happen to be in the past. Actual results have just been achieved and budgets were prepared a year ago, and both are nothing but sunk information. So why are we comparing them? A number of people believe like this, and some people believe no, it's better to know whether we've done right or we've done wrong in the last year so that we can improve things. A number of people believe we learn from our experiences, we learn from our mistakes, and with the help of this we improve future results. If we start ignoring the past, sometimes it doesn't help. Okay, so we need to be realistic. So that's the feedback. Feed forward control is slightly different. Feed forward control is that we compare last year's results. Okay, last year which I'm talking about, I mean the year just ended. Okay, we are comparing last year's actual results with future budgets. Not the budgets which had been produced 12 months ago, but last year's actual results will be compared with future budgets to develop variances. It still gives us the variance, which is not part of the syllabus to develop these variances, but the idea is simply this: it gives us a more futuristic view. More futuristic view is that if, for example, this comparison gives us an adverse result, that last year our sales were 1000, future budget is telling us 900, so there is a shortage of 100 sales. So, but we haven't had a loss of 100 sales, we are going to have a loss, we are likely to have a loss. So before it actually happens, we can tell the sales manager, look, I'm going to swear at you, I'm going to blame you, I'm going to shout at you after a month because your sales will be less. Can you try to change something so that I don't need to shout at you after a month? Can you do something now? So we warn the managers, we tell them in advance that there is a likely adverse variance in your department. Can you do something about this now so that these adverse results can be completely eliminated, or at least slightly better results can be produced? Okay, not 100%, but maybe 40, 60, 70% improvement can be made. So a number of people believe feed forward control system is more powerful than the feedback control system. But again, these are opinions. Feed forward is not part of the syllabus in terms of the applications. Okay, here is the budgeting types. So very quickly I will run over them. Please read them from the textbook and the notes, and it will all be self-explanatory. So let me mention these. Now these are different types of budgets which any organization can produce, which have been divided into 6. Okay, we will discuss them. There are generally 2 basic approaches to budgeting. One we consider is traditional budgeting approach, that budgets can be produced in a traditional way. Traditional way means that many companies are using this way of budgeting. And what is the traditional way of budgeting? That many companies are producing budgets which are fixed budgets, or periodic budgets. Okay, that we produce budget for 1 year of time. Budget is fixed for 1 year of time. Okay, so we develop the budget at the beginning of the year, and then we, for the whole year, we keep on trying to achieve the results, and right at the end of the year, budgeted results are compared with the actual results. Difference is called as the variance. Okay. Secondly, budget's traditional way of producing the budget is through the incremental budgeting. Incremental idea is this, that last year's, whatever the results were achieved, those actual results of last year's are updated with some known changes, with some plus and minuses, and last year's actual results plus or minus equals to the next year's budgets. Some of the known changes I can explain to you, okay? I mean to say, last year we spent X amount of money on purchases. We are likely to buy the same raw material next year, but by adding 3, 4, 5% inflation, or any inflation in the society you are living in. Okay, we will buy the same material, but we will pay more money due to inflation. Second known change can be activity levels. That last year 1000 components were purchased for 1000 units. So one component for 1 unit. Next year we are planning to produce 1500 units. So of course we need to buy 1500 components based upon that. Okay, or there could be another which could be efficiency levels. Last year efficiency levels of the workforce was, let's say, 80%, and we are starting a new training program or motivational program which would boost the morale of the workforce, and that would improve the efficiency from 80 to 82%, for example, from 80% to 82%, and if that helps, that will reduce the labor cost. Okay, so some of the known changes are adjusted to the last year's results, and then last year's results are brought forward into the next year with some plus and minus. Okay, thirdly, budgets in a traditional way are produced with the help of participation of different managers. So participatory budgets. Participatory budgets are also called as bottom up. That budgets are produced at the lower part of the organization, and then they are sent for review to the top management, and then they improve the budgets and then implemented. Okay, so traditionally budgets are fixed and periodic, budgets are incremental, and budgets are participatory. Okay, and you can read some advantages anyway. Alternative approach. Alternative approaches to budgeting. That some people who think that these approaches are not very useful for their organization, they can use alternative approach as well. I mean to say is, instead of fixing a budget for 1 year, we can create another budget which is called as rolling budget or continuous budget. In this budgeting exercise, we don't create the budget for whole year in details. What we do is we set 1 year budget in brief terms, outline, and we don't have any aim of implementing 1 full year of budget. What we do is we break down 1 year budget into, let's say, 12 monthly budgets. January budget for February, for March, and so. And our aim is to only implement budget for January. Soon as the month of January ends, we compare the results of actual results of January with the budgeted results of January. We learn from our mistakes or any things we learn from the budget and actual performance, and then we try to adopt the approach for February so that February can go better than January. Okay, and this keeps on going. 1 month achieved, we delete that month from the budget period and we add 1 month from the next year. So if, for example, we have achieved January, we can cross it out and we can add January from the next year. We completed the month of February 2014, we can add 1 month of February 2015, and this budget keeps on rolling like this on continuous basis. That's why it's called as continuous budgets. So advantages can be that it's in time updating of the timely updating of the budgets. We don't sleep for the whole year, but every time, every month we keep on updating our budgeted results. Okay. Secondly, a quick feedback system. Rather than calculating variances at the end of the year, we can do the variance analysis at the month end, so that every month we can see what we have gained and what we have lost, and that can become the basis for the next period. Okay. Now, if some organizations do not like incremental budgeting, okay, they can adopt something called as zero-based budgeting. By the way, what type of organization do you think can apply incremental idea? And that will help you to understand zero-based budgets. Remember incremental budget, last year's results brought forward, actual results brought forward, plus or minus any changes equals to incremental budget for the next year. Where can it work, by the way? I think it's very suitable somewhere where people believe that whatever we have done last year, we are going to do the same next year with some changes, small changes. For example, I have seen McDonald's doing the same thing for years and years and years, okay, with small changes, okay. I have seen the Pizza Hut doing the same thing for years and years and years. I have seen the supermarkets, okay, different type of supermarkets, Nando's and so many restaurants doing the same thing over years and years and years. Only few things change. Inflation, foreign exchange rates, okay, any of the activity levels change, maybe efficiency levels change, technology change, but they are producing and selling more or less the same thing. So any industry where there is some sort of consistency, incremental budgets work quite well. For example, car industry. Car industry is one of the few manufacturing industries where incremental budgeting is very suitable. Okay, reason being, let's suppose in 2015 a new model of the car was launched. Now the company knows this model will stay in the market for 4 years, for example. So for 4 years there is a consistent atmosphere, consistent environment. There is no need to change anything. Okay, just keep on fluctuating things, these pluses and minuses. Otherwise, brought forward results are very much okay. But whereas some organizations cannot rely upon the past, they might have done something in the past and they have no intention to do the same thing in the future, then they prefer zero-based budgets. Okay, generally we believe services are subject to this zero-based budgeting, meaning to say the hospitals, okay, hospitals can well apply zero-based budgets in their environment. For example, I am developing a budget for an accident and emergency, or I'm developing a budget for example, the whole hospital. Last year, we have bought some of the equipment in the hospital. Are we going to buy the same equipment next year? And you are saying, no, we might be doing different things. Okay, we were treating different patients last year. We may be treating completely different patients next year. Okay, or maybe in school or education industry. Okay, the method of teaching changes all the time. Okay, probably the way I'm talking to you, that was not there when I was doing my accountancy qualification. Okay, I mean, I had to see the people mostly from their backside, because they used to have the whiteboard and even chalks as well. So the question is, when they were writing on the whiteboard, they couldn't see me because they were writing like this. So most of the backsides I was seeing while I was studying, but now actually I'm interacting with you. You can see the slides there, you can see any of the screens I'm changing from here to there, and this is going on. Okay, so the idea is simply this, that methodology changes. If the methodology changes, it would change the cost as well. Secondly, in the service industry, we noticed that the costs are generally discretionary, which depend on the decision of the management. In manufacturing, the product actually dictates the cost. If you look at the car, okay, we know that there have to be 4 tires in the car, there have to be engine in the car, there have to be stereo in the car, there have to be a wheel in the car, and there has to be seats in the car, and so on, body of the car, paint of the car. Well, the cost is there. You can't do anything. You can't send the car with 2 tires. So the car will tell the cost. But in the service industry, managers decide whether they like to spend more money or they want to spend less money, simply because of the nature of the services. Okay, remember the nature of services when we use an acronym SHIP, that they are simultaneous, they are heterogeneous, they are intangible, okay, and they are perishable. And due to the nature of services, okay, cost always changes from one year to another, and a number of people feel zero-based budgets are better than incremental budgets in their organization. Zero-based budgets do not bring forward non-value addition from the last year. Last year we might have done something wrong, and incremental budget will bring it forward for the next year, but zero-based budget will not bring forward from last year. Zero-based budget will produce every budget from a scratch and challenge every function and activity from the scratch. Why are we spending money here and why are we spending money there? So every time a new justification has to be there. Okay, against participatory, a number of people don't like to produce budgets with the help of participation of junior managers. They prefer non-participation. Non-participatory budgets are also called as top-down budgets, which is simply the idea that top management produces the budget, prepares the budget, and the budget is flown down to the junior managers and implemented, and they can't say no. Do you think non-participatory works somewhere? Oh yes, in most of the companies it works. Like small shops, when the owner is 1 and 2 maybe sales assistants. So the owner of the shop is telling the salespeople or telling the shop assistants what to do. Owner of the shop is deciding what to buy and what not to buy. Owner of the shop is setting the prices. Owner of the shop is making all decisions. And the workforce is just doing things as they are told. A number of people are very comfortable in those things. And a number of people feel that non-participation is like making somebody slave. So again, please don't get me wrong, different perceptions, okay? A number of people believe that non-participation works in a number of organizations because top management makes quick decisions and quick decisions can be implemented in time rather than participation, okay? And then this wheel is going from here and then coming there and then going here and then coming there. Between senior and junior managers, they prepare budgets and review, then send back and then review, and then this process takes time. And non-participation, no need to ask any question. This is the budget, work on it, achieve it, okay? These are some of the budgetary approaches which you should be looking at, okay? Now one thing before I wind up the session. Some people think that all 6 should be applied in one organization. No, answer is no. Okay, in one organization, completely the choice of the accountants or management, okay, what budgetary style they want to implement, okay. It can be a mixture of traditional and alternative approaches, okay. It doesn't mean that if we are looking to apply traditional way, we must stick to this approach, and if we are looking to apply alternative approach, then we must stick to this order. No, not at all. Okay, any organization can do pick and choose in this way, that organization can prepare budgets on rolling basis. At the same time, they can have incremental, and at the same time, it can be non-participatory as well. Okay, right? So please keep in mind, budgets should have three basic components, either periodic or rolling, incremental or zero based, participation or non-participation. Okay, anywhere these can be added. For example, participatory, zero based and rolling can be working as well. So idea is any of the three, okay, from each category. This one or this one, that two or that two, and that three or that three. Any of the three can be picked up from each. Okay, that makes up the budgeting approach for that organization. Okay, the next one is activity-based budgeting, but activity-based budgeting is not much to say if you have understood the activity-based costing. And remember, what was the activity-based costing? Activity-based costing was, I can write down here, or actually I can go back in there. Activity-based budgeting. Activity-based budgeting is based upon a system of activity-based costing. So any organization cannot implement activity-based budgeting if they do not have a system of activity-based costing. And remember in ABC session, what we were talking about, ABC is not costing for materials and labor, ABC is costing for the overheads primarily. But activity-based budgeting can work for materials and labor as well. Number two, activity-based budgeting, remember ABC costing system is based upon costing on the basis of individual activity. So it is not costing for the whole organization. ABC system is costing for individual activities. So actually our budget process is broken down into small functions and activities. Reason being, we feel it is very hard to plan or budget the whole large organization, but it is very appropriate and reasonable to budget a small activity. Okay, because the managers of each activity know all in and out of the activity, and they know where is a value addition and they know where is a non-value addition, and any non-value addition or any wasteful things or idle resources can be eliminated with the help of activity-based budgeting. Also, with the help of activity-based budgeting, we can create better cost structure, okay, rather than planning for an inappropriate cost. Activity-based costing and budgeting help us to develop appropriate cost of the product and services, and with the help of that we can establish better sales targets, better selling prices, which will help to achieve better sales budgets. Okay, so a number of things are interrelated. You can read about them from the textbook and the notes, and this discussion ends. Okay, so as I said, it's purely knowledge basis. In here we will start applying from a different session. There is fixed and flexible budgeting as well, but that will be covered in a different session. Okay, so I'll come back to you with some other areas within the budgeting process, which will be fixed and flexible budgets and the application of learning curve in budgeting process. Okay, so take care, all the very best. See you soon. Goodbye.